strategic finance is about proactively working with the team. So include the finance component with your everyday thinking, with your operations team, with your strategic initiatives, with your sales team. Help drive those decisions.
I'm Ed Marsh, host of the Industrial Growth Institute podcast, and today I'm joined by Mike Sibley, who's a CPA and a partner in the firm James Moore. Now you're probably asking, wait a minute, hold on, time out. We're supposed to talk about revenue growth here, and why do we have an accountant, or hopefully you won't be offended if I say a bean counter with me today? And I'll say that I've gotten to know Mike over the course of last year, and he is not your average bean counter. He's got 25 years of experience as a certified public accountant. He specializes in audit and tax, of course, but also transition planning. And his expertise extends to fractional CFO services, specifically tailored for manufacturing clients. And he also brings a certified black belt in Lean Six Sigma. So he's focused primarily on manufacturing and distribution. He leads the manufacturing services team at James Moore. He oversees the operations at two of the Florida offices in Daytona Beach and DeLand. But furthermore, he actively contributes to the community and the manufacturing community as the 2024 chairman of the Daytona Regional Chamber of Commerce. And he remains involved with the Volusia Manufacturing Association. He first came to my attention because he's also a content creator, which sets him apart from many accountants. He writes periodic articles, and together with Kevin Golden, he hosts James Moore's More on Manufacturing podcast, a show that I've joined a couple times to talk about revenue growth for manufacturers. So with that, please do your part, like, share, comment, and of course, subscribe. And so let's get started. Welcome, Mike. Thanks for joining me.
Thanks, Ed. Appreciate being on the show, and I'm looking forward to the conversation. Yeah, I appreciate the introduction. I may be traditionally a bean counter, but I love getting way beyond that.
Yeah, and we're definitely going to talk about pushing the edge of that envelope. But first, the important stuff. You're on the east coast of Florida. That, I think, has been relatively quiet for the last couple of months compared to the west coast. Have you escaped the storms unscathed?
Well, I have. I've been pretty fortunate. So I'm in the Daytona Beach area, and we did get beat up pretty good by Milton. Hurricane Milton came through here. I think we got like 15 inches of rain, but the west coast of Florida has been absolutely hammered. The Panhandle. We did have some damage, a lot of in the area. I've been fortunate to come through unscathed, but yeah, certainly the Florida community has been pretty beat up. So we're trying to recover from that, as well as some of our states to the north, with North Carolina and that with the beating they took.
Right. So as often as we chatted, I feel like I haven't gotten to know you really well. I know about what you do, but haven't gotten to know you. I know you went to college up in Maine. Now you're in Florida. Give me the short version of where you're from and how you ended up in Florida.
Yeah, so I grew up in Vermont, went to school at St. Joseph's College of Maine. Really, I worked for a firm up there because of manufacturing. There's a lot of manufacturing up there, and I fell in love with manufacturing. I love seeing something go from just this raw material to a finished product, and love everything in between. But Maine and New England, there's a lot of snow, and the snow adds up for a long time. So
but not so many hurricanes.
Yeah, not many hurricanes, but you get 6-7 months of. I remember last year I was in Maine. We got 100 inches of snow, and moved to Florida almost 25 years ago. And I just love being able to play golf year round, and be out and about, and not have to worry about all the additional things you need when you're in the snow country. So,
sure.
Love Florida. I tend to travel all over the country to meet with clients, but which occasionally means getting a little bit of cold weather. So I get my fix, and I get to come back to Florida.
Well, it's pretty in the Vermont, New Hampshire, Maine area right now with the foliage. It's a beautiful time of year.
It is the best time of the year. I love fall in New England.
Well, spring is pretty nice too.
Yeah, if you don't count the mud, so that's part of things.
Right. So you were surrounded by manufacturing. That's how you developed your interest in manufacturing. How about your interest in being an accountant?
Yeah, so I don't know. It just sort of clicked. When I was in high school, trying to figure out what I wanted to do. Uh, there's a certain uh, symmetry to accounting, how it balances, how it tells a story. And for some reason, and I think that's one of the things that gets missed with everybody kind of thinks of, hey, accounting is just putting numbers in, and it can be. There's a very, but numbers tell a story. And what I kind of found in the symmetry of accounting, the balancing and how it all comes together is that there's this story that you can pull from it, and how do you take that story and do something with it? So the accounting side I got really into. I really want to understand the rules. I wanted to understand all that stuff so I could help clients. But as I got into that and I got into auditing, started getting into processes and learning business processes and what worked and what didn't work, and that propelled me to go even further. And nowadays my job is less about accounting and more about operations and output, and how does that mix with the story, the story that the financials are telling us. And that's where there's just so many disconnects. So I just fell in love with this idea that I can take numbers and make them meaningful.
And so then that's bled into what's really more, I would say, business consulting than
Mhm.
kind of traditional accounting. Yeah, you work on cash flow and financial reporting and that kind of basic stuff, but you're also speaking with, I think, couching every conversation, from what I understand, in a discussion of the valuation of the business and
Mhm.
improving operations. You do a lot of M&A related work, certainly a lot of transition planning among
Mhm.
privately held small and mid-size industrial manufacturers. But then you've told some anecdotes that are really interesting, like the a project that you worked on with a company where you reduced the number of employee steps that they walked each day in the building by 2 miles or something like that. And we've talked about trends in automation, where automation, 20 years ago was about reducing cost, and then 10 years ago maybe about improving safety, and now it's about the fact that companies just can't get the right workers to come in and do the work. So you're looking at all these things from a big picture perspective. What kinds of trends are you seeing?
Yeah, I think, everybody I talk to, clients, others in and around the industry, workforce and workforce development is becoming just even more difficult. I know we've been talking about workforce development for years and years and years, going back, 20 years easily, workforce development with the ebbs and the flows of manufacturing. It's been cool. It's been not cool. We're trying to make it so everybody realizes that manufacturing is not what you saw 100 years ago necessarily, right?
Right.
So, but it still isn't driving people into the workforce. And, what we're seeing now with the trends is you're having this pull of seeing who can offer the most money to get these people. And oftentimes you got the big guys who are able to offer more than the littler guys. And so the little or the small to medium sized businesses, and probably even a tier above that, are struggling just to get their people are stressed out. They're trying to get more work done with less resources. They know that compensation is a real big push, and they can't necessarily compete. So we've got to figure out then, say, take a step back and say, how can we do more with less?
Right.
That anecdote about reducing steps in 2 miles. That's just one project where we had to look and say, okay, we're spending way too much time, way too much overtime. We're not meeting the objectives. We got to reduce some time. And that wasn't necessary. That wasn't like an equipment automation. That was just literally looking at processes and saying, there's a tremendous amount of waste in here. Let's cut that down. I know automation is also about being able to say, hey, we can't get the skilled workforce. Can we automate some of these things? And some processes and some things will be more expensive to do, some are less. But taking a look at processes and improving processes should be one of the strategic initiatives. And when you talk about value and transition planning and things like that, I look at every business as potentially for sale, whether it's now, 5 years from now.
Right.
But also, what's forgotten about that is the contingency. What if something happens? If you're the CEO and you're the main person in there and everything relies, what happens if something happens to you? The value of your business can go down tremendously if
Or if
you're
your
not
spouse
there.
gets seriously ill and you just want to spend time there instead of at work every day.
Exactly. So it's not just about selling, but everything we try to do, we step back and say, what driver are we pulling that's increasing the value of your business? And there's several drivers that we look at and we go through to make sure that you're as well rounded as you can be to drive that valuation. And most likely as an output, you're probably going to get more profitable because of that, or you should be.
And when you raise those topics, do people embrace that, or do they hesitate, saying, "Wait a minute, I thought you were an accountant. Why are you talking to me about these things?"
Yeah, I actually had a client. I remember we were talking 6, 7 months back, and he's like, "Wow, you're focusing a lot on operations. I thought you were just going to come in here and make sure the books were good." I said, "No, it's not. Yes, the books are good. The books will be even better when we continue to improve things. But we want to make sure what happens operationally. The books are just going to tell us that story. So if we don't have the things working the way we need operationally, then the books are going to be right, but they're not going to tell us all of the story that we need. And then we take that and we look, give a really good example. A lot of companies can produce a margin report, product by product margin report. Most companies don't, they look at that and say, great, our margins are great. Except they don't look back to our financials and say, are they about the same as our margins in the financial? Oftentimes they're not. Why? Because there's problems in the data being collected in the operational side of things. So you think your margins are better than they are. Mm-hmm. And so when I start making these connections, then we can start drilling down to what's happening operationally that we need to improve so we can get the margins up.
And how often do you encounter somebody who would almost rather not know?
Every once in a while, that happens. There are people out there that they're doing it the way they want to do it. They don't take the advice. And sometimes that's not a great fit because you can't. Sometimes I was just talking to somebody the other day. You can lead a horse to water, but you can't. You can't always force them to drink. And sometimes what it takes really is, okay, let's take your approach for a little while. Let's keep through and let's see what happens. And I have another one that it's taken almost a year, but we're finally now starting to make the changes. They're seeing the differences. They're seeing what they have to do. And so really I think some people just need a little more confirmation that the things we're saying make sense because they've always done things a certain way and they've been able to survive. Well, we want to take it from survive to thrive to being very valuable. And just because, very valuable doesn't mean you have to sell. It doesn't mean you are going to sell. It could mean that you're leaving it to the family. It could mean you're going to sell to the management. There's a lot of different aspects, but we want you to have that option.
Right. Makes sense. In your experience, is that breadth of perspective rare among accountants, or have I just not talked to the right folks who work like you do?
There are other accountants out there, I think that will do stuff like this. I think a lot of times the accountant industry tends to have a little bit of a, kind of back to that bean counter, right? We come in, we do our job, we get out.
Right.
I personally don't feel the value in that because I think there's a lot more to bring to the table. I think it's a lot more fun. I think it's great to have that opportunity to help make a difference for companies because you're not just, you go back to the days of when COVID happened a few years back, being very involved meant saving jobs. So it made a difference, whether it was navigating through PPP and ERC and, some of those other things, it's about improving lives and helping businesses thrive and make those businesses better. And I think, I believe in a rising tide type of mentality, right? If we make everything better, everything gets better for everybody, the economy, everything. So I think that's just, it is a little bit of a unique approach maybe, but I think it's a fun approach.
So we've, in some of our conversations, touched on marketing, but in my experience, accountants are very skeptical of marketing expense. They often can't tie it back to results. They just see it as a drag on the bottom line. Is that, do you think that characterizes the way many accountants think about it? And how do you approach some kind of an expense like that where you can't necessarily tie it to a concrete return, but you understand instinctively that it's important?
Yeah, I think sometimes accountants see the thing with accountants is we tend to be historical in nature, reporting in nature. Here's a number, and hey, if you want to cut costs, where can you cut costs?
Right.
And because there's a lack of a true understanding, I think accountants are reporting nature. They're just it's the fact. You've got $1 million in marketing costs. That's a fact, right? You can see it on and it's hard to understand branding. It's hard to understand market, getting into the market and really making sure the market knows who you are, because you've obviously then got to take marketing and convert it into sales. And I think generally speaking, there's a lack of understanding between what is business development and what's marketing. Oftentimes they overlap. They think it's one and the same. And marketing, I look at as sort of brand awareness, right? There's that getting that out there, know who we are, what we have, all these different things. And you're right, it is hard to measure, but it is. But there are ways to take a look at it and say what is more effective and what's not.
Mm-hmm.
And those are things I like to talk about: is what is our effectiveness on it, what is our brand. And you can see it. I mean, heck, for James Moore and Company, one of our biggest sources now is our digital marketing efforts.
That's
How our brand is out there. It's becoming a huge factor. So we put a lot of resources in that. That's different than our business development efforts. Our sales efforts are then taking other things and going out and really building that pipeline, building our process to build in our pipeline and go get that new work. It's the same with the manufacturer. It's the same with any industry, right? You build that brand awareness. But I do think, though, that there are ways to look at marketing and say what's effective, what's not effective. Is this accomplishing our goal? And I think you should do that with every process. With every dollar that you spend, there's hey, what is it effective? Can you tie it necessarily always perfectly the way we want to? No. But I think you can evaluate and see what's working and what's not working.
Sure. I was going to ask you about the marketing that James Moore does. I think you set an example. You do invest in marketing. And I know that you and your colleagues recently went through some sales training as well. How was that received, and how have you seen that generate more activity or better results?
Yeah, the sales training piece has been phenomenal. And I think, you and I have talked about this before on when you've come on our show. You've got to have your sales team competent, well-trained, understand the processes, know how to close a business. And I think one of the things that from an accounting standpoint, so accountants, we come up, we go to school, we learn how debits and credits, we learn financial statements, tax returns, whatever it is. There's not a lot of leadership and sales training. And so we've needed to invest in helping people go talk to clients, go talk to prospects, and really learn how to understand their needs. Not to go through a sort of a checklist of, okay, can I have your tax return? I think we can do, really get to understand what's their problem, what are their needs, what are their goals, and then how can we help them accomplish those goals and help them solve their problems. So we become more problem solving than we are just a compliance firm that, hey, we can do your audit, we can do your tax return, but how do we help you as a business succeed? And the sales training, I think, help our people understand how to turn that and how to ask questions in a way, and how to frame proposals in a way that meets the expectations and really the how we're going to help solve those problems. So it's been a tremendous resource for us.
It's also a really interesting analog, because one of the things I see among most manufacturers is you talked about you go to school and learn debits and credits. They go to school and learn engineering or manufacturing or process or something like that. And they focus on the stuff that they make. They focus on how they make it. And they don't focus on the buyer's problems, the buyer's outcomes. Have you found that the work that you've done internally has allowed you to tell that story in a way for manufacturers that kind of makes a light bulb go on for them about how they need to adapt their marketing and sales?
I've actually started talking more about that with them, and really because I think some of the things that you've brought up, because I think that was really, sometimes you see just because they have a sales department, you kind of make this assumption that, hey, they know what they're doing, they must be doing this stuff. And what you realize in some cases that they tend to be more order takers. And that's kind of what accountants tend to be, as order takers, and manufacturers can be order takers. Hey, this PO is coming in, this thing's coming in. But, and I do work with some manufacturers that are very good about saying, hey, we can help you solve your problem. That's what we do. And those you see really can go out and generate business and take on market share in a different way than those who are just straight order takers.
Sure.
And so, I think there is a difference in that. And actually, because of the conversations you and I have, I think that's a different approach, especially in the small and medium-sized companies who are looking for ways to diversify their revenue. Because let's get back to valuation for a second. Because diversification of your revenue base leads to a higher valuation.
Right.
Go back to how do we help our clients, our customers solve their problems? Maybe that leads to more and different types of products or services aligned with products that we can now provide, and that diversifies us, makes us more valuable.
Yeah, or maybe even different business models. You and I had a conversation before we started recording about a robotics automation company that I met at FabTech recently that has adopted a product as a service, an entire subscription model, not just an operating lease, but everything is rolled into a monthly cost, maintenance and spare parts and remote troubleshooting and even a replacement. 24 hours, they'll get a replacement machine there if they can't fix it remotely. So if you take that approach of let's think in a fresh way about how we're going to grow revenue, you can find product extensions, you can find adjacent markets, but you can also find other ways to sell the existing stuff that may be appealing to rising generations that buy differently.
Yeah, absolutely. And I think, and I've seen a little bit of that over the years, but my guess is the owner of that business went out and understood the problems of their customer base. And it could have been, how do we finance these things? Or I can't hire the people to maintain them.
Right.
So he probably heard all of these different problems, said, hey, I've got an idea. I love those innovative approaches because now, and my guess is he's going to have a sticky customer and probably get better margins. And guess what that leads back to? Higher valuation.
Right.
Again, and I told you this before, and hopefully I don't drive your listeners nuts with this idea of higher valuation, but I think it's critical to connect these kind of things to valuation because that's what you're trying to do, right? You're trying to listen, why are people in business? To make money. You're not in business unless you're a nonprofit. You're a nonprofit. You're not. Your sole goal is to serve your mission, right? But as a business, your goal is to be profitable, and so to be profitable increases your valuation, which gives you flexibility again to know.
Right.
You have that ability to sell if you want to bring in investors. It just gives you a lot more flexibility and more leverage.
Sure. So back to the marketing that James Moore does, one of the things that you've done is launch the podcast, the Moore and Manufacturing podcast. What triggered that? How did you decide to start doing that?
Well, I think part of it was, trying to find ways to deliver content in a different way. COVID had a big impact on how are we going to do things? How are we going to get out there? And really what you did start seeing a different movement. How can we deliver something that's informative? And the podcast idea came up. If we can try and do something that is 20, 25, 30 minutes, people can listen to it in the car. They can do it at their leisure. They can go on to Spotify. They can go on to Apple, whatever their podcast is, but we can deliver information in a different way. Some people like to read their information, so that's why we turn them into articles. Some people are more about reading. Some people are more listening. And I think, anybody I talk to nowadays, they're listening to a podcast,
right?
And they've got their list of 5 or 10 different podcasts that they may listen to, and so we know we saw that there's a different way that people are receiving their content, and we have to be part of that. We have to be on the forefront of that, and it was unbelievable to me that we were getting the number of downloads that we have been and the feedback that we were getting. It was like, whoa. I never even imagined that anybody would listen to an accountant talk about some of this stuff. And so it's been a lot of fun. We're going to keep doing it and keep going. And we feel like it's a great way to deliver content.
And have you been able to tie any new client engagements or specific impact to it, or is it just anecdotal?
Oh, no, it's been a combination of specific client engagements as well. And one of the ways is, so what's really interesting is, so when a prospect calls us up, they're doing their research. And so they're checking us out, and they're listening to these podcasts. And one of the first things they'll tell me is, hey, I listened to your podcast on X or Y or Z or whatever it was and really found it informative. So they're checking up on us and in different ways. And they're using this as a way to judge us
Right.
already before they come on. So when they call, they kind of have a sense for what we know. So the feedback has been really good. And we've found it. It's also interesting how many clients also are listening to it and saying, Mike, that I really love that podcast. That gave me some insights. Can we talk about this more?
Wow.
Because it's stuff that maybe they weren't thinking about. Maybe we just didn't have a chance to talk about in conversations, but they heard it and said, hey, I need to understand more about this. And I think actually, we had a client that I think I turned on to you and that needed help with the sales process. That they knew we were talking about sales things and said, hey, I could use some help, and that's how it happened. And so it's those kind of, we may not always be able to solve their problem, but the goal is to have the network of people that can help solve those problems.
And how long did it take you to establish a tempo and a format that worked? Did you figure it out of the gate, or has it been an evolution?
Now, it's been an evolution, and I think we're going to continue to evolve even in the next year. We've been doing it once a month. We want to actually try to move it to twice a month now, and which means a lot more planning, a lot more foresight with guests such as yourself and others. That we try to get a rotation of good, different content and different views on different
Right.
things, and so. But that's something we're working on, the next evolution of our podcast.
Interesting. Have any of your clients undertaken a podcast based on having observed you?
We have one who's considering it. Some of them just haven't had necessarily the resources to do
Sure.
it or kind of the know-how. But we provided. We actually had our marketing team provide a little bit of insights into how we're doing things, and even had a client who's shooting a commercial about why they're using us.
Hmm.
You mentioned the Chamber of Commerce. They're now doing a podcast. We did a whole renovation. They're doing podcasts. So it is really becoming a different way of getting things. But I think, depending on the manufacturer and the industry and how they reach out, it's a good way to cover things that like your example of the person doing the subscription model on equipment.
Right.
That's solving a problem that's out there. It might be a good idea for a podcast, a way to get information out.
Yeah, the way people, you talked about it during COVID, and it's accelerated since then. Even if you look at Google search results, I think only 28% of Google searches ever click on an organic link, and something like 60% never go anywhere. They do the search and they stop right there because they get the snippet or the AI excerpt or
Mm-hmm.
whatever answers the question for them. So
Mm-hmm.
companies that have built this model based on writing blog articles and optimizing web pages in hopes of achieving SEO results and
Mm-hmm.
attracting traffic from an inbound methodology to their website, it's changing. Traffic is
Mm-hmm.
dropping, SEO results are dropping, so you got to figure out how to deliver content. And I think
Mm-hmm.
you're right. I call it edutainment, the kind of stuff that
Yeah.
people consume passively that helps them
Mm-hmm.
be better in their job. It's enriching, it's entertaining, it's educational. It gives them a
Mm-hmm.
perspective. They think about things they might not have otherwise, but they can do it while they're driving carpool or cutting the grass or washing dishes or whatever the case may be.
Right. Well, and that's why the focus and is try to have a couple of nuggets out of
Right.
that, and so the goal with our podcast, every once in a while we'll do, if there's a big tax update, we'll focus on tax or something like that. But the focus always comes back to value, so that way we can say, okay, we try to tie everything back to how are you increasing the value of your business.
Right.
Don't just do something for the sake of doing it. How do you increase the value of your business? That's the nuggets we try to come away from. And with your, you've been on talking about processes or sales training or the various other things that, and they were great points. And all of that, if you do it, if you follow it, it will lead to customer diversification, new
Right.
services, new products, whatever it might be, and you will become more valuable.
But often companies, I mean, you talk about this valuation, which I hear as predictable, profitable revenue growth.
Mhm.
But experience tells me that often manufacturing company owners tend to focus on their IP and their expenses, and they tend to think of those as being drivers of valuation. What's the secret to help them understand that the revenue growth portion of it is an important driver of value as well?
Well, I think first you got to, when you step back, and I've seen this a lot over the years, um, so I've had some manufacturing owners who are actually former sales guys.
Okay.
And so that just were able to pull it all together. They're actually a different breed than your engineer who comes up, builds something and starts going from that. And depending on their background, they like to do what they can easily control.
Right.
And so costs, processes, those are easier to control. Sales is an attitude in some ways, right? Marketing, but going out and building that pipeline and building that strategy, going to talk to customers about their needs, about how you can help them. That's an attitude that you have to go proactively do. That's really, really tough to do, but you can only cost cut so much.
Right.
And, I've had conversations with clients lately. I said, listen, revenue is what we need. We need to put our strategic efforts around driving revenue and revenue growth. And that can be uncomfortable for some people. And but that's why you come back to building that sales team, building those processes, building the accountability and the strategic efforts to then go after what makes sense for you. And I think a lot of times, all too often, you see some manufacturers as well. A lot of manufacturers don't have a strategic plan. They don't have a strategic planning process. So they're not using a guiding vision
Right.
to help drive them towards what they need. And I think when you couple those things together, you tend to focus inwardly and hope the order taking. So let's get back to the order taking piece. Your order takers. So when you're an order taker, you're subject to the market conditions of whatever your need of your product is, as opposed to evolving products,
Sure.
product development, services, other pain points that they have. And so, do you want to drive your own destiny, or do you want the market to drive you?
When you talk about the strategic planning perspective, what's your observation in terms of company size and maybe other factors that impact the viability and the effectiveness of a real governance board with independent directors that can help provide some of that bigger picture sort of coaching for a CEO?
Yeah, so that's an interesting question. I'm not sure. There's probably not a dividing line necessarily. It's probably a little bit of a gray, but I'll start with I tend to see that companies about every $5 million they change. So when a company's 5 million versus 10 versus 15 versus 20, and that 15 to 20 million dollars in revenue, there's another about evolving nature of this business. You're now becoming bigger, and you've got more layers perhaps of management. And as a CEO, oftentimes what we find is that CEO, that business owner who's grown that business, doesn't necessarily have somebody to talk to. And so that's where you start seeing maybe this idea of a small board, or even just a mentoring type relationship with somebody else.
Right.
And I've seen CEOs do that. But once you get into, the upper 30s and 40s and beyond, now you start looking at, hey, this is getting pretty serious. We might need a more board governance level, and have it be strategic to maybe the things you're missing as a CEO. So that way you can get that input and get that accountability. Because I think that's what ends up happening is there's a little bit of a lack of accountability if you're that owner. And sometimes they need that. And I actually had an owner one time tell me, Mike, I just need a boss. Can you be my boss? And I said, sure. So we created a plan and we created some things. And sometimes, so I'm a business owner, partner. So I've seen a lot of things as a business owner. So oftentimes I'm another voice. But as I get in that business, but as you grow, having some level of a governance structure, and I've seen it work well in the 30, 40, $50 million range for companies, because again, you continue to change and evolve as you grow. At some point, you become corporate.
Right.
And you need to be more corporate because the processes need to allow all that throughput. I had a client who was growing to about $20 million, and they were still kind of operating like they were $2 or $3 million mom and pop shop. And it was great from kind of a feeling standpoint, but they were all stressed out because they couldn't get the throughput, just they couldn't get it through
Right.
because the process has not evolved to allow them to do that quantity, that volume, and deal with the people issues that you have, and deal with the trying to drive sales. And so what happens is you grow like that, and now you put a cost structure to support that growth. Then you need the sales structure to make sure you're continuing to drive, because if all of a sudden you dry up and you got this cost structure, you've got to unload that cost structure. But oftentimes that leads to losses for a year or two before you realize, hey, we've got to do something.
Right.
And so it requires that constant evaluation. So to your point, having some level of an outside governance or accountability model or board to help make you think differently can be very beneficial.
And what do you find with owners? Are they really freaked out about losing control if they bring in a real governance board, or are they fairly sanguine about it, realizing that there's benefit?
I think there's always the concern that, hey, if we bring somebody else in, they haven't lived through what we lived through. They don't know it as well. We've done things always the same way. So there is some of that, although you do see some who are very, very open to other ideas and want best practices. So it's a little bit of a mixed bag depending on how they grew up, because sometimes you see CEOs who come in who maybe weren't the founder of the company, but they've come in to help over the years and maybe grew up under a model that was governance, and you see them more open to ideas. And I think it's really, I think the idea of being open to ideas and really stepping back and looking at things only serves you well, to evaluate all sides of things, say, hey, what could we be doing different?
Sure.
Because, on one hand, you'll hear some say, we're just not getting the results. We're just not getting the results. Well, what's the definition of insanity, right? Doing the same thing over and over again and expecting different results.
Right.
Let's look at it differently. Let's drive differently.
So your sales training foray with James Moore is really intriguing to me, because when I came into business, it was at a time when sales training was expected. I mean, companies like HP and Xerox ran year-long training programs for new sales reps coming in. I didn't go through one of those, but I went through a very rigorous training program with several companies I was with. But today it seems like so few companies invest in sales training. Do you have any kind of stick your finger in the air, rough guess of what percentage of your clients regularly have sales training?
Um, I'm going to say a minor amount. It's exactly kind of what and even for us as we went through it, and we're going to continue it each year now. I mean, we're so interesting for accountants is we're all the sales team, right? We go out and we're part of the business development process. Now we are bringing on business developers and we have things like that, but anybody that talks to a client is kind of solving problems, and we want
Sure.
to know how to talk. So we're going to bring that in. But we had to dedicate resources to it. We had to look at what was on their plates and make sure they could dedicate the amount of time. We didn't overwhelm them with all the other work. So we had to really balance out their work to make sure that they could go through it. So we're doing cohorts at a time. So 1 year timeframes with cohorts, and we'll put more and more people so we can properly balance out that work. But when I think about I'm just kind of going through client lists, and very few of them do sales training.
Yeah, it's astounding to me. And it feels like it's such an easy place to start. I mean, of course, in order to get the training to stick, you have to go through the process we've talked about on one of your shows of hiring the right salespeople. You have to have
Mm-hmm.
the right sales process and methodology. You have to have sales managers that can coach. You have to emphasize role playing. You have to have the right sales enablement content. All of those pieces are important, but fundamentally, maybe the sales manager that can coach comes first, but sales training is just a basic step. And I just don't understand how companies have lost that understanding.
Yeah, I'm especially now after I didn't go through sales training myself in the past, and you know some things came intuitive to me and some things I had to learn over time. I read a lot of books. So I was sort of self-taught in some ways. And the things that this first cohort went through, it was kind of validating, but I had to make a lot of effort to learn how to do that stuff. And
Sure.
thinking back 10, 15 years ago, I could have I could have gotten there so much faster and had so much more results as opposed to trying to self-learn over the years on how to do this. And I
Right.
think that gets to your point, right? You hire somebody in, make sure they're properly trained. They can be that much more effective for you sooner. So ROI is always a thing we talk about. Well, if you're going to hire somebody, you're going to invest in their salary for a period of time, get them the tools, get them the ability, and help them get there fast. That ROI will come so much faster. And then you can set your strategy. And as a, as a CEO, you get your sales crew going, get their accountabilities, get their goals. They're properly trained, and they're going to meet those objectives.
Right. Yeah, hiring the right sales candidates is a fascinating topic. We talked about it one time. What many companies don't understand is that resumes and traditional interviews are only 18% predictive of sales success. And the cost of sales hiring mistakes is much higher than companies think. Let's say, 100 grand a year base. You've got expenses, you've got the load on top of that. It's costing you maybe $150,000 a year.
Mm-hmm.
There's the direct cost of the time management spends interviewing people and unsure because they just don't have a good track record. They think maybe they'll be better, but probably they won't. Is it worth my doing it? There's the opportunity cost of what an underperforming salesperson leaves on the table. There's the opportunity cost of an empty territory. Companies hesitate to change people. They hesitate to hire new ones just because they're so uncertain. So before you know, you're adding up to, for a typical industrial manufacturing sales territory, maybe a $500,000 mistake in just
Mm-hmm.
hiring the wrong person.
Yeah, you're, so typically you say the cost of turnover is at least 1 year's salary. But when you start loading in lost opportunity costs, lost revenue,
Yep.
because of that, you're absolutely right. 250, 500, you're probably in the right range of that. And, I'm in total agreement. I think, having the right way to get the right candidates in and evaluate them and then get them up to speed quick. Certainly worse is you hold on to somebody that's not very good for too long, right? You get them there a year, 2 years, 3 years, because you don't have performance metrics, because you don't have good evaluation processes, because you don't have good accountability. They've kind of just been order taking for a while. And,
Yep.
hey, as long as there's revenue coming in the door, you may not even notice that they're not really giving you that ROI. They're not really building that brand for you. They're not getting out there and getting those sales. And so before long, you potentially lose somebody that's maybe established some relationships that you've got to transition, that you got to, so it's just, you're shooting yourself in the foot. And I'm a fan of this across all departments. Give people the right resources to do the job they need to do, and which includes training. And you think about it, I mean, the sales team they're the tip of the spear, right? They're the ones that go out and bring in that revenue. So if you don't have the right team out there doing that, you're losing revenue, you're losing opportunities. And again, you're back to hoping market conditions are forcing companies to you, and that you don't have great competition.
Do you have a set of
I,
metrics that you recommend companies use to evaluate their sales team? I mean, I see many of them look at revenue. And so you've got the veteran person who makes no cold calls, does no prospecting, just has long-term relationships and milks that for a
mhm.
high revenue that's perceived as being the hot shot in the company. Whereas you may have somebody with only a couple of years that's much more effective at going out and bringing in new accounts, reducing concentration risk, bringing in higher margin business. How do you recommend companies evaluate their salespeople?
Yeah, well, one, I'd say bring in a guy like you to who's an expert on building that out. So that's, I think that's one thing. But you just said a few key things that I look at. What is the margin what is the margin of the business that they're bringing in? What does their pipeline look like? How fast are they closing accounts? What's the average sale for the client?
Right.
Yeah, you can bring in a bunch of revenue, but if it's low margin revenue, great. I remember talking to a client years ago, and they were kind of break even overall. And when we broke down, they had a low volume product and a high volume product. The high volume product was losing money, and the high volume product was making enough money to get them down to a net zero. They didn't understand their costing very well. So I helped them look at their costing. And I'll tell you what, whoever the salesperson was bringing in that low volume, high margin stuff, they may be the superstar of the business, not the person that's bringing in all this high volume
Right.
stuff that we're losing money on.
Right.
And so I think looking at all of those things and probably other factors are going to be really, really important to that. So it can't just be revenue in
Right.
and of itself. That can be very misleading.
So obviously you're very creative in the way you think about business, but I assume that you're also probably logical and cautious or hesitant to some degree. What's a career decision that you've made along the way that you worried at the time was, oh my goodness, I've really messed this up, a big mistake, but turned out really well for you?
Hmm. Well, fortunately, I've always had the luxury of working for a firm like this that allows us to try different things. So I've gone down the road of being a certified fraud examiner, and sort of just trying different things as I look at how I want my career to evolve. Um, that worked out really well, but turned out I didn't really like it because I didn't want to testify in court a whole bunch of times. Did fine with it, but ultimately, sort of the change into getting away from what I call compliance, auditing, tax, which we still do, the firm does, but focusing more on the fractional CFO, the business consulting, is a bit of a risk because part of for me it's the same thing. I've got to bring in revenue, I've got to serve clients, and it's a different way, but it's been it's been hard, it's been a learning process, but it's been a lot of fun, and it's become super rewarding. From We're seeing the growth, we're seeing that these companies need help.
Right.
And these small to mid-sized market companies, they really need the help. And they're a lot of fun to work with because a lot of them want it and they're willing to listen. They're becoming more and more open to this kind of help, the help that you likely provide on the sales side of things, but from an overall view and looking at the overall business. So that's been fun. Probably not the direct answer you're looking for, but it's I've tried a bunch of different things, but going down this route of the business consultant has just been a tremendous amount of fun for me.
And you said that you're always reading. You got a long list of books that you can recommend to people. What are two or three titles that you think for an industrial manufacturer wanting to understand how to make finance a strategic enabler of their business as opposed to a compliance hassle? What would you recommend they look at?
So shoot, I'm always bad at remembering names. So I've got a library of probably 80 books. So I listen to books on Audible.
Mm-hmm.
And so one of the things I started with personally was some of the leadership books and some of the whole SEAL Team 6 books, and you can search on them because I thought it, it's that accountability and that leadership. So way back, obviously, Good to Great was the book that everybody read. And I still use that as some of my thinking, but then added in some of these leadership books with some of these SEAL Team 6 guys, because what did they go through? How do they look at it as a team? I also recently read a book on accountability, because I think that's one of the things, and we're incorporating at James Moore and Company, not new, but really enhancing it. And as I talk to a lot of my clients, one of the things we often find is a lack of accountability, and we're afraid to hold people accountable. We're afraid to lose people. We don't have a culture of accountability, and therefore, when somebody's not performing to expectations, everybody else around knows.
Right.
Because you're not holding. So that's been another one. I wish I could remember the names off the top of my head. I always struggle. Ask me in song, music titles and book titles, and I lose them. But
I love that
I could
emphasis
share.
on accountability. I agree. I've seen a real deterioration in accountability. I mean, whether it's sales reps who don't turn their expense reports in for 120 days and then still expect to be,
Mm-hmm.
reimbursed, or they
Mm-hmm.
don't bother updating their forecast, or they're not even accountable to doing the prospecting activities that are expected, and then they get
Mm-hmm.
away with it. And
Yeah.
everyone sees that, like you said.
Yeah, I think it's, when you get into, some of the things like the Seven Habits and, all those kind of traditional books, I'm a big fan of all of those things because you have to build into it. And I actually had really kind of a neat conversation on one of my podcasts with Jim Carnell, who's the CEO of Command Medical Products. He's on there, and we talk about candidness at the management team level.
Mm-hmm.
And they're an interesting group because they're willing to hold each other. They're willing to call each other out. In other words, as a management team, they'll say, hey, you said you were going to do this. This isn't just the CEO. This is each team saying, hey, you said you were going to do this. And we're throwing the BS flag on there, and you didn't do this.
Right.
And you have to have a certain temperament, but you ought to be able to thrive in that environment. But it's also saying, you know what? Hey, I committed to something, so I need to get it done. It's one of the most unique companies that I've had the privilege to work with over the years because they take that candidness, they turn it into accountability, and they're willing to call each other out and for the betterment of the team, they're not jerks. They don't do it in a way that's mean. They don't do it in a way that's arrogant. They do it in a way that says, hey, for the team to improve, for the company to improve, you said you were going to do this. And that's been one of the best things I've seen for a company to do with their management team. And they share a lot of information. Sometimes I think that becomes problematic with, manufacturers where they won't share enough information with their key people so they know what's driving the business,
right,
what's good and what's bad. How can I be accountable if I don't even know what any metrics are, how we're doing, how are we performing,
right.
Those kind of things.
You've obviously got several periods of very intense work at various times during the year. I'm always interested in how folks manage stress and workload. What have you found is effective when you go into these periods where it's just kind of 20-hour days?
Yeah, I think the first thing we try to do as a firm is understand the workload and making sure it's ready to be done. In other words, we've got from our client's perspective, has the work come in and is it all the way where we need it to be so we can get it in process? Because our goal is to get it through our systems as quickly as possible. But we also use a leverage model. So a lot of times what's worked is you see people get overwhelmed and, we'll sit and talk and say, okay, are you delegating properly? Can this go to this person? Is this, why are you taking on these functions? And it's the same conversation I actually have with clients, actually sometimes with CEOs. I'm saying, why is all of this coming to you? You need, if you have to be involved in this stuff, that means your people aren't trained right.
Right.
So similar to public accounting, we need to make sure our people are trained from the bottom up. And the same with the manufacturer. They got to make sure their people are properly trained to do those things. Delegate, because you and I were talking beforehand, the stress on the workforce because of not being able to bring in as many people is getting more and more difficult. But leverage is one way to do that, making sure your people are properly trained. So that way you can push the work down. That way you can look at and do the things. And we've been using this thing called highest and best use. What's the highest and best use of each person?
Mm-hmm.
And that changes depending on where you are, the department you're in, and those kind of things. And so what's that highest and best use? Well, my highest and best use is not hand entering data on a tax return. That's not what I need to be doing. Same thing with a CEO. It doesn't need to be micromanaging, certain production items that your production people can handle. If they're not able to handle it, they're either not the right person, or you haven't trained them properly. Give them the right training. And with that, I think that helps mitigate the stress, setting right deadlines. Sometimes we see that. And again, you can relate this stuff to manufacturing, contractors, public accounting firms, managing those expectations for your customers. I know all of us, we get that client, that customer that comes in, I need it tomorrow. Well, I know, but I've got a long line of people who are already here, and we'll see what we can do. Here's what we can do to manage that expectation.
Right.
One of the things that happens, and I actually do a simulation with Legos and building airplanes, and we start with a really bad process, and we give them 6 minutes to see how many airplanes they can produce. Normally, they can only do 5. airplanes, maybe 6, if they're lucky, in 5 or 6 minutes. And within that, I'll take one out and I say, no, I want this one done first. And you can see the stress levels. So then what we do is we tweak the processes and we disallow things like that. But the throughput is going through so quickly, we don't have to worry about somebody screaming and saying, hey, I need something. So we go from getting 5 done to about 35
Wow.
in the same time frame, just by making some tweaks in the process. And so what we've done, say with our tax season hits, and we have changed our processes. We have some automations, we have some bots, but we've changed our processes to maximize quality throughput through our systems, because we look at things, we figured out where the waste was. We use the same Lean Six Sigma thought processes that a manufacturer would on our processes.
Right.
And it works. It's tremendous, but it's always coming back and saying, okay, where is our waste? How do we eliminate that? And it's amazing how much stress can be eliminated.
And you mentioned golf earlier. Is that a stress relief escape valve for you, or is that where you do business on the course, or what?
I'll do a little business here and there, but it's really kind of a way to keep my mind focused on something else. Although, I'm not sure how much stress it's relieving when I'm out there and I, hit a great drive, and next thing you know, you duff your approach shot, and
Right.
you're like, this is killing me, right? My wife would probably, I had a great Saturday. Saturday we went golfing. My wife and I went golfing Saturday and Sunday. I had a great Saturday. I was killing it. Then Sunday, I couldn't. The ball went nowhere where I wanted to, and it's like, how can this happen in one day, right? So
Right.
she would probably say that wasn't doing a great deal of good for my stress, but at least it was on something else.
Got it. So you spoke about some of the processes that you put in place at James Moore. Let's talk more about the firm. What would you say characterizes the firm, and what's your typical client profile?
So yeah, what characterizes the firm is really back to that. We're a large firm, but we really want that hands-on feel with our clients. That's what we're really looking for with our clients. That's what we we want to be highly engaged with them as much as possible, because I think that's where the value is for them. And we can be a resource, and that's how we look at things. And so that's where we're different. And we're not trying to be the largest CPA firm in the world. We're trying to be the CPA firm that provides really great service, but really engaged with our clients. And I think that's what makes us different, is that high engagement level, as opposed to just volume, just trying to crank out charge hours. It's
Right.
not just about charge hours with us. And we really focus on our people having a good quality of life. And so we want our people, we have great flexibility programs for our people. We've got remote people all over the country. So we kind of think if our people are happy, they're going to treat our clients really well, and they're going to be helpful. And nothing makes me happier than when, I've got one of my people coming in, Mike, I got some great, after talking to so-and-so, I've got some great ideas that we can implement with them. Like, let's call them up and talk to them. And they're just so grateful. So that's our approach. When I look at, for us, we have different industry groups that we focus on: construction, government, nonprofit, real estate, and of course, manufacturing is the one area that I have a team that focuses on with that. Our typical client profiles in that $10 to $50 million range, in different aspects of manufacturing subsegments. We do work with clients that are under 10 million. It's just a matter of where their needs are, but really looking to get into where we can spend more time with them in their operations and work with them and do some of these fractional services that we do, because we also have fractional HR and IT services and things of that nature. So we really want to be that resource for them.
And geographically, you work all over the country?
We do. In fact, I last few months I've been spending some time up in New Jersey. I've been out to Illinois. We work wherever. And actually, with the remote side of things, it's so easy to manage things remotely as well. And of course, what I like to do is, we can manage a lot remotely, but then have periodic visits if
Sure.
there's somebody locally, we're out there quite a bit. But if it's somebody that's in New Jersey or Illinois or somewhere else, we might get out there quarterly or
Right.
whatever cadence makes sense, because I'm a big believer in getting out on the plant floor and seeing what's going on, because
Right.
that's how you can then start connecting operations to finance.
So, as a company may be thinking about the kind of accounting wisdom that would help them in their business, what do you think is the biggest unknown that companies should expect from an accounting firm but don't know to ask?
Well, I think accountants have, I think it goes back to what we were kind of talking about with what are your financial statements telling? And do you truly understand things like working capital? Do you understand debt and leverage? And do you understand margins? And what does that margin really mean? And I think sometimes, kind of going back to, you got a bill of materials, right? And you got a sales price, and you say, hey, we got great margins on this stuff. But all too often, what they can be talking to their accounting firm about is from a metrics standpoint, from a financial ratio standpoint, from a valuation standpoint, how are we looking and what does this stuff mean? Particularly if you're 3 to 5 years out from selling, you want to be talking to your accounting firm early on about that stuff.
Right.
There are skeletons that could be in the closet. There are metrics that you could possibly improve. There are things you can do to improve your valuation. You just got to ask them for that help.
Right.
And a lot of accounting firms have the ability to do that.
Thinking about revenue growth, if a company decides that they want to invest in some initiatives, they want to add a couple headcount to marketing and really get serious about digital, or they want to maybe add a new director of sales that's going to really be able to bring the quality of the sales operation up, or maybe invest in a partner program or something. How would you work through the P&L with them to try to find some slack to fund that, or would you encourage them to think about perhaps some debt in order to fund it? How do you go through that sort of an evaluation?
Yeah, that's actually a really good. In fact, I just got off a call with a client talking about this very thing a little while ago, and we talked about the idea of debt. So let's hit that for just a second. So there's some beliefs out there that debt is a very bad thing. Debt is a part of business, and debt can be a good thing to help finance the future of the business. Where debt becomes bad is when you're relying strictly on debt to just meet basic operating costs. If you're financing just straight up operating costs, it's only a matter of time before
Right.
you are so cash strapped you're in trouble.
Right.
I'm not an advocate. I think you've got to really be careful about that. Where I am a fan of debt, and debt can be a good thing, is funding strategic initiatives or future items that could bring future cash flows. It could be equipment, it could be a very strategic person, it could be R&D,
Mm-hmm.
could be some of those, could be any combination of those things. So debt in and of itself is not necessarily a bad thing, and if used strategically and with purpose, can be a good way to fund some of those activities. Now, let's put debt aside and let's walk into the P&L. I had a meeting with a client, I remember a little over a year ago, and he just was constantly surprised at where he felt like the net income wasn't there. And I said, well, and this was a kind of a new client for me, and we were just getting to know each other. I said, let's do this. Let's walk through the P&L. And I want you to explain to me what some of this stuff means, because I'm new to your business and I don't understand it all. And as we were going through this stuff, he didn't realize how costs had sort of just crept in.
Wow.
And, what happens when you grow is you start spending just kind of happens. And because everybody's busy, there's not as much questioning of
Right.
everything.
Right.
And it's not until you flatten out or even start seeing a decrease where everybody starts back, like, how did we get so fat? We saw that really 04, 05, 06, as we started leading into the recession. All of a sudden, you started seeing people with layoffs and things like that, and you started hearing do more with less and some of these things. Well, what was happening is they realized we actually could have accomplished more with less. It was too easy to throw dollars at them.
Right.
And that's what we see a lot of times. So just by going through the P&L and say, explain this to me, help me understand this, and really question, okay, is this adding value to our businesses or not? And if it's not, why are you continuing to do it? But I also look at the margin side of things. So let's call that, your overhead expenses or your selling general administrative expense. You go through that. But let's go back. Your bill of materials says you should be at X amount of labor on this product. Are you? Can you even look at your product costs and on a product by product basis? If not, how are you measuring your margins at a product basis? And are they what you thought they were going to be? I can't tell you how many times I see with manufacturers where they thought their labor was 5% and it's 8.
Wow.
An example, or 9 or 10. And you're like, well, why? I don't know. Got to go spend some time out on the plant floor. They spend some time on the plant floor and they realize, can't believe we were doing something this way.
Wow.
And so it's not just necessarily about looking at all those costs. It's actually really, it's just challenging yourself to go through and say, are we doing things? Problem is that takes a little bit of time to do, but it's always well worth it.
So put aside the question of funding and investment, how often do you recommend companies go through that rigorous process just to make sure they're not getting fat without realizing it?
Well, I think it's at least on an annual basis, right? You go through, but here's what I always recommend: set a budget, build a budget,
zero base or incremental based on past years.
It depends. So I think it depends on how good your line of sight is into your revenue and your revenue growth and where that's going or what your customers are doing. Mm-hmm. But basically, you look at it and you say, okay, what is it going to take to support this revenue? And go from there. And then what I like to do, and what we do with a lot of our clients, is we take them monthly and say, where are we compared to budget?
Right.
And how are we doing? Why are we over or under? So now you take that and you're really looking at it and you're questioning yourselves on a monthly basis.
Right.
Well, guess what that means? You got to have a good closing process. You have a process that closes within 10 to 15 days at the most. So you can really question that and saying, hey, how are we doing compared to this? And then bring in other operational metrics. So now you got into a monthly cadence. And I would say, don't be afraid to bring in key members of management and share some of that. I know some don't want to share down to the net income. That's okay. There's a way to do that. You can share down to the margin level with your operational management, as an example.
And so let's say whether it's with debt or by cutting fat that's just kind of accumulated, you find the money, you fund a strategic investment, you bring in that new VP of sales, or you invest in really ramping up a YouTube channel or a podcast or something like that. What do you recommend in terms of metrics going into it so that the decision about walking away from sunk costs later on is not so traumatic? It's clear it's either working according to what we expected or it's not.
Well, I think that's a good question. I think to some degree you're going to look at, what is that strategic initiative? And whether it's a podcast, whether it's a VP of sales, whether it's sales training, and you're going to say, what are we looking to get out of this? And that's going to drive in my mind, that's going to drive what those metrics are. Give you an example. We recently hired a CIO, Chief Innovation Officer. And, some of that stuff is intangible, right? It's not easily, but we've set expectations and said, these are the things we want to hit.
Right.
We're going to measure you against those things and these initiatives that we want to get done. Same thing with a VP of sales. What are you trying to do? Maybe you need to start a sales training program. Maybe you need to build out a process for your sales department. Maybe you need a new revenue, a way to visit and do all. To me, the metrics may not necessarily always just be, the number metrics are easy to come up with. Mm-hmm. It's what are those other goals that you're going to hold them accountable to as part of your strategy.
How about understanding competitors' financial position? I understand often in that $50 million privately held space, it's hard to get access to that information, but is it important to realize maybe opportunities to take advantage of, or possible acquisition opportunities, or hidden threats, or even benchmark your own status?
Yeah, that's a great question. I think understanding your competition is a key part of the strategic piece of whatever your strategy should be. And there are ways you can do that, right? So, what is it that you don't do that your competitor, and how do you find that out? Go talk to your customers. Let's just say you're bidding on a project or you're bidding on something, some product. If you lose, go find out. If you win, go some information, get some intelligence on what your competitor was offering, what they were doing. Oftentimes, I've seen it situations where some of these competitors come in and they'll just buy the work. I
Right.
mean, absolutely low margin. And you're sitting there, okay, keep that relationship because they're going to fail. There's just, there's no way they can keep that up at that rate and be really good, high quality that you need. But you go talk to your customers and you go find out, maybe it's distributors that can give you some information, or other ways of going out and just even going to their website and saying, what are they offering?
Right.
Maybe they're offering some unique thing that we're not. And I think you've got to look at that, understand that. The other thing I think, and you've made a great point of this, is saying, what do our customers need? What are their pain points? And it may be that there's this little company out there that could be a nice little bolt on that can actually solve a great piece and give us greater market share over what we do.
Right.
Now you're driving revenue. You got this little inorganic thing, but it's adding so much value to what you already do. Now you can expand your market share. And so understanding, I think your point was so key. Understanding the pain points of your customers and then seeing, is there a way we can do it by developing it, or can we go buy it and bring
Right.
it in and add it on?
Yeah. What do you find in terms of small and mid-sized businesses? Do they think of that naturally, or do you have to really beat them over the head to get them think about an acquisition?
Some do, not enough, really, because I think it's an overwhelming resource. And I think, I've done quite a bit of work with private equity.
Mm-hmm.
So when a private equity comes in and some of those strategics, they're looking at a broader and they're willing to bring the resources to help it. But it doesn't necessarily have to be, just private equity driven. You can be a company but the one thing I would, advise, and I've seen companies do this before, you go out and buy a company, you bolt them on, you're not going to get that value right away. It's
Right.
going to take, private equity comes in. Okay, you just bought them 3 months ago. We're not paying you for that because it's unproven yet. So you got to be careful on the timing of those kind of acquisitions, especially if you're looking to go out for sale.
Mm-hmm.
But if you've got that 3 to 5 year window and you've got an acquisition that can really add value, you should be considering. So I think, going back to the strategic planning process, what do you want to be? Where are you at valuation wise? What is it that our customers are telling us that they need that we're not providing? And see if you can go out and get that acquisition. It's a great way. If you think about it, if you're going to build something internally, you're going to have to build the expertise, hire the people, maybe get the equipment, develop processes, a sales channel. How are you going to do? If you get a bolt on, you can cut that time frame down.
Right. And I would say not only back to the strategic planning process, but back to that governance board. If you have independent directors that have some of that background and expertise and can kind of consistently be reminding during meetings, hey, have we thought about what we could be bolting on? Have we thought about the impact of an economic slowdown on adjacent companies that might be under duress? That would be an opportunity for us to pick them up. Those kinds of routine conversations, sometimes it takes an outside voice to help drive that.
Yeah, absolutely. And I think, what ends up happening is all too often, the CEO, owner, they're so busy working on the
Right.
business or in the business that they don't have time to step back and say, okay, I got to work on the business.
Right.
And we have those conversations all the time. And to your point, having that group out there that can challenge you or think about things in a different way and help you step back. But I think, one of the value drivers of a business is a business that isn't solely dependent on one person for the whole thing.
Sure.
In other words, you take that one person out and the whole thing falls apart, loses value. So, to anybody who's in that role, really work on pushing work down, training, developing your people, allow them to take these things on, allow them to make a mistake every once in a while, give them enough latitude. Obviously, don't want to make a detrimental mistake that's going to kill the business,
Right.
but they can make a little mistake here and some little mistakes to learn, and then use those as moments to help them evolve as a leader in your organization.
Sure.
And invest in them with leadership training and things of that nature.
All right. So for folks that have been listening to this and say, wow, Mike's got a really refreshing and intriguing perspective that want to get in touch with you, I'll drop the company website, I'll drop the podcast, and I'll drop your LinkedIn profile links into the show notes. But how do you recommend people get in touch with you?
Easiest way is always send me an email. We get I get a lot of emails, and we get responses out and get back in touch with people. So if they have a question, send me an email. They can always call our main line as well. So if you go to jmco.com, you can get right into. We have all of our industries, all of our partners. But quick email to me and connect with me on LinkedIn and ask a question, and we'll connect up and see how we can help.
And subscribe to your podcast so you get insights on a regular basis, and coming up not just once a month, but twice a month, it sounds like.
That's the goal. We're going to move, hopefully over the course of 2025, we'll get into a twice a month rhythm. And yeah, absolutely, sign up for that. And hey, shoot me an email if there's a topic that we should be discussing that we'd love to learn more about, and we'll try to find an expert resource on it and get them on the podcast. Because chances are, if one company's got an issue, there's probably a lot of companies that have a similar issue. So I'm always looking for more ideas on how we can add value in our podcast.
Cool. All right, Mike, it's time. Wrap us up. How can accounting and strategic finance be used to help grow revenue and to grow valuation, and kind of give us the perspective that you bring of somebody with this broader understanding rather than just kind of from an accounting and compliance perspective?
Yeah, so accounting, bookkeeping, that's history. That's historical in nature. It's good. It helps provide context. But really what happens, strategic finance is about proactively working with the team. So include the finance component with your everyday thinking, with your operations team, with your strategic initiatives, with your sales team to help drive those decisions. And that tends to be what I bring to the table with clients. But that's what you want your finance team to be, is allow them to be part of those operational discussions and help bring the context of things like margins and metrics and what that means on the business, how that revenue flows to the bottom line. They can be very big assets in that regard.
Wonderful way to wrap it up. Thank you. Thanks for your spending time. Thanks for your insights. Thanks everyone for listening. Please be sure to share and like and comment, and of course to subscribe and to reach out to Mike with any questions you have. So thank you, Mike, so much for joining me today.
Thanks, Ed. I enjoyed the conversation. Appreciate being on with you.
Good.